date is the 19th of November 2024. It's a Tuesday. If you haven't noticed, I only trade Tuesday, Wednesdays, and Thursdays, which are typically the strongest days for day trading. And the market is not looking ideal for day trading. I'm looking for shorts, to be honest, based on fundamentals. And if we look at the S&P 500, I want to see price action below. I want to see price make a lower low based off that previous support there. And the Nasdaq, or we could even see a head and shoulders, but I ideally want to see a lower low before I trade the market, which I call the S&P 500. In terms of the Nasdaq, looking a little bit more promising. If price can hold below, also show some pretty clear price action below that weekly resistance, which could be newfound support. But if that price falls straight through that and looks pretty clear, pretty strong price action to the downside, I'll look for some shorts. Now, why would that happen? Basically, I'm looking for passive selling, so it's a little bit more challenging to day trade passive, either buying and selling, because the levels are not as traded as or adhered to as strictly. It was a little bit more challenging, so we could even look for another level here if I miss the initial one, and that's when we could see some more day traders step in. So let's talk about why I'm looking for shorts. Basically, it's 2024. We're still dealing with inflation. I think inflation is slowing down the economy. And inflation from what? So two sources: exchange rate induced inflation, meaning a depreciating dollar causes import prices to be higher, and that's both in America and Australia. Physical policy induced inflation, meaning government spending causes prices to rise, whether that be spending on defence or policy spending. Governments basically want to save the world, but they give too much of our money away, and that has a cost. And I think when revenue increases have failed, they'll soon realise that the economy is not as strong as they thought. But that will probably be too late. I imagine they live in ivory towers, but hey, that's where we live in. So yeah, basically looking for some clearer direction. That's it. So here we go. It's my cardinal sins. It's still early stages. I'm still working on and updating this, but this is what we're working with at the moment. In terms of trend, what do I say? Zero. Above, I think above 543 was it? Yeah, above 5. That was giving me a green light to trade, but that does not. So basically, I won't be trading unless I get those indicators come through. Key levels. Put the key levels in. Yep. That's all I'm doing today. Sometimes I'd put multiple in, but that's all we got. Patterns. Yeah, I've briefly gone over the patterns. There's not a lot. Basically, we're waiting for patterns, and if you can't see any patterns, it's basically a clear indication that there's not very many day traders. If, for example, before the market turned last year in November, patterns was working really well for day trading, and it was fantastic. But ultimately, the market changed. Day traders stopped making money, and that was the bottom of the market. So probability. So let's have a look at probabilities. should we give it some room? Shouldn't really need to if it holds below, to be honest. Yeah, 4 hourly here. Here I'm looking for about 15%. Wow. Massively overestimated that. With less day traders perhaps. Gives us 18, so we'll leave it there for now. Gee. Again, we'll be looking for break and retest on this one. Or perhaps bounce and absorption as well. When I'm talking about absorption, I'm talking about the order flow. So there's a good channel that I follow on YouTube that freely broadcasts the order flow, like the footprints chart and bookmap. It's not something you want to really glue your eyes on constantly, mainly around these key levels, because you'll start seeing things that are just not there. Like there's always going to be absorption, but it depends. It might not always be relevant. Point 0.3, that's ambitious. I think 0.2 would be okay for that. I'll just have to adjust this, the lot size to accommodate increase in market volatility. What have we got here? Is that realistic? That's about 1%. We're on the NAS, yeah, so that's a bad day for the NASDAQ, but typically a worst day, a bad day for the NASDAQ is about just over 2%. So 1% is a bad day, but it's not terrible. So that's certainly doable. I'd certainly expect the market to do something like that. Just go back down to, oh great. Don't know why these one. I have to adjust these again for some reason. And I like to have these on a lower time frame, 15 and below. Bit of a mess today. Put it somewhere there. Oh, that's not the right one. Damn, great. Huh. There we go. Turn the screen up, I'm not sure if it's coming through or not. It's getting a little bit late here in Australia. Now, does that look likely? Ideally, it needs to look obvious. I think I've got that in my notes somewhere. Probabilities. It should be obvious what price will do once at target. If this and then that. So that's not really looking obvious to me. We're already down pre-market. It's really Friday. Pre-market 0.26. If we open, say, there, possible. But not very obvious. Let's see, the colours coming through or not. That's not very great, is it? That looks a little bit more obvious, actually. That's why we want the price to be below. Turn some of these effects off. Disable for an hour. There we go. Daily with a 4 hourly. The problem with looking at previous price action is this was like October, like the 14th, like that was a month ago. So I'm not sure how much we can rely on that, especially if we've got passive sellers. So honestly, I'll just be looking for new price action, to be honest. This is Tuesday here. So that's 0.3. It must be that one. Oh, it's 0.2 there. Yeah, sorry, it's about there. It doesn't quite look right to me. I'm 4 hourly. Okay. Where it is, we need to go down another 0.5%, so that will be 0.8. So if we're down 0.8%, yeah, I could see that keep going. Try maybe 1% for rebound. So 0.8, so we've got another 0.2. So that's just there. That's not a lot, actually, is it? But good enough. When price decreases rather than increases, so we have a downtrend, right? Price tends to pivot or bounce or hover, whichever term you like to use, around round numbers like 0.5%, 1%, 1.5%, 2%, especially on the NASDAQ. It likes round numbers. So we'll go with that. We'll obviously keep an eye out because that could be a little bit out. And we'll look for another. I might copy and paste that. So yeah, it's probably not going to be any trades today, but we can always put the work in, and you never know. Actually. No, there may be some resistance there. I did say it looked like it could possibly bounce. Looked more probable. And then we could get a push down below there. That's kind of cool. That's looking more probable actually. So that's all I see at the moment, and we've got also another level here, so sort of 4 hourly, also confirming confluences. That's what they say. We got two. They're not exactly beside each at the same point, but they're close enough. We've got 0.1%. It's close enough to get some momentum in the market. Okay, and of course the Nasdaq. We've got. I'll wait for it to get below there. And it's nowhere to get. I mean, 0.25%. I just don't think it's wise to trade that until we get some clearer indication. Rank the probabilities. Okay, I think that's probably got it also could be a W pattern as well. They're pretty strong. It'd be that W pattern would be stronger if that holds its support there, but we're not going to know if that's support or not. Anyway. Let's make it a higher low, so quite easily investors could see that as a buy opportunity, but we'll have to see what the strength is like on the order flow. Now that's more of an art, to be honest. Say if price sells off at 9.30, rises to that resistance level, and we see a lot of absorption step in, that would be ideal. I'd give that probably a 6 or 7. We haven't got a game plan on this one. Give us some room to 0.4%. Yeah, that's a lot. It's more than I like actually. 0.3. It's less than I like. Okay. And honestly, we're probably not going to get where we want to buy, so probably not going to get the low either, depending. So in this scenario, I think would be best to go 0.15 and then run I would say trailing stop, but you could put basically a stop loss there, so that's 1.5 is locked in. I think that would work. tab. Don't trade around indecision arrows, no problem. Major data releases we've got. Don't see anything. So I haven't had a. There's another Trading Economics is another website I check out for data releases. Major key levels, that's a little bit challenging. See what price did last Monday. Friday, Thursday, Wednesday, Tuesday, Monday. Sold off at 10. $9.30 actually. $9.30 it sold off within half an hour. Basically this whole day's move was in that half an hour. If you missed it, well that's it. 0.5%. That's something you need to be aware of. 10.30. Monday, Tuesday price sold off, but that was on the back of probably Trump rally. So, but I'll still factor that in. Could be a speedy market. Yes, both bull and bear entries. Does help with cognitive dissonance, but what I might do, because I really don't believe the market's going up, I don't have a plan for it if it does go up. So if it does go up, it's got to be, I'm going to perceive that as uncertainty. So I'll put a blanket over price action here. So if it trades above there, no problem. No. That's about it's a little bit challenging because if market volatility picks up, my risk will match market volatility. So I'll put yes for that. Beyond a certain point, got that one at open within a range. So I haven't really got a range that I'm concentrating on. At open, it certainly could move very quickly, but I'm prepared for that. But if it was to move, say, I mean, both of them are break and retests or bounces, so if it does move very, very suddenly, it may be a near miss, and that may be perceived as uncertainty. But I'm just going to leave that for now and just be mindful of it. Just setting my alarm. For market open. Okay. And we're done. We're looking at one trade, so once we make that decision, even if it's a losing trade, that's it. We walk away. Click this and make sure this one's on.